In this video, we're going to talk about overconfidence versus conviction. Good question. Stay tuned. Hey traders, a very warm welcome to you. So, viewer, subscriber question, overconfidence versus conviction. Love it. Great question. Very, very similar. What are the differences? What are the signals or warning signs that you've got into overconfidence? And what are the kind of good signs that we're trying to push ourselves into conviction? Because obviously, we want to have conviction on our trades. Now, why do we want conviction on our trades? Pretty simply put, we want to be in the trade, or we want to have conviction to pull that trigger. We want to be conviction that when we're in the trade, that we're holding the trade to its maturity. That could be a target that we've preset, whatever it may be. It could be a trailing stop loss. It's not second guessing ourselves. That's the key to it. Okay, now if we look at overconfidence, we'll go back to that point in a second. If we look at overconfidence, overconfidence is overconfidence in your ability to predict the market as a trader. I think we've all been there. I've been there. I know myself, and I'm guessing that a lot of you watching this have as well as lacking conviction or having too much. You can't really have too much conviction, but lacking conviction as well is another problem. But let's go back to overconfidence. Overconfidence comes with saying, hey, you know what? I can do what I want here. Market's fine. I'm going to just pick a long and it's going to go up. Look, I can pick a chart. I can pick a stock. I can pick an entry, and I'm a genius. You know, that, as we know, never ever works out in the long term. You might get away with it for a bit, but ultimately what happens is you do that a few times and you get a few wins and you think, yeah, I'm a genius. I'm a trading god. I'm a hedge fund genius. Look, I'll be on 10 million by the end of the year. Look, I might as well start getting out all the Hamptons brochures and all that kind of stuff. But you know what happens is you're in a trade, it's a loser, you're overconfident, you think, yeah, it's great, it's going to work well, add some more, add some more, add some more, smack, down you go, there goes your account, goodbye, no more overconfident people in the market, please. And that's pretty much how it happens. So let's go back to the point. Okay, so we don't want overconfidence, but we do want conviction. It comes down a lot to your trading plan. Again, you know, we go back to this point, but you know, I'm a big advocate for a trading planner. Even if your trading plan says to you, you know what, I've got some flexibility here. I'm going to trade the open and I'm going to either go long or short. I wouldn't necessarily recommend that for everybody, but even if it does, giving yourself some boundaries for at least risk on the trade, at the least. You know, even if you just say that's my maximum risk on the trade, it's a maximum size, and then let yourself go wild with the rest of it, at least you're giving yourself half a chance. And so conviction comes with the belief that you have got the right trading plan for the market conditions. Because if you kind of drill down into it, I'm no kind of clinical psychologist, but if you drill down into the thought of your conviction, you say, well, I'm nervous about pulling the trigger here, or I want to come out of the trade before my kind of exit. You don't really believe that your trading plan is effective. You're kind of in the heat of the moment. You want to overrule what you've planned out in the kind of cold light of day when the markets will close, which is generally when we do our trading plan. And so you've got to try to give yourself more confidence that your trading plan is effective. And generally, the way to do that is either to just have experience in doing that trade and say, yes, you know what? I should be holding this trade until it gets to X point or X pips or X level, because my previous 20 trades, if I'd have done that, would have been very profitable for me. Or the previous 20 times, 30 times, how far you want to go back, depending on sort of guy you are, have shown that if I do that, it's in my best interest and I will make money. And that will give you the conviction. The problem comes when you don't have conviction is that you're not certain in your mind that it's the best thing to do. And okay, of course, we've got that short-term uncertainty of, okay, will it work? Will it won't work? But if we really truly believe that betting on this or doing this process, doing this action will benefit us for the long term, then we will have the conviction to do it. You know, it's like if you had a fixed odds games machine or fixed odds heads and tails, and it was a 60% payout, 40% loss, in other words, skewed in our favor, we'd have conviction. We'd obviously set our money management so we didn't go bust, but we'd have conviction to bet on the weighted side of the coin, knowing that over time it was gonna work out, because with no reason for us not to. We would just know that that's the best thing to do for us. And so, you know, from my own personal perspective, getting conviction is always looking back at my trades, or looking back, and it's normally my trades. I'm not really one for kind of back testing too much. I like to try things out small size and then say, okay, well, actually, And then you say, okay, well, actually, if I did this for each of those trades, I would be in a much better position, or I wouldn't have lost so much, or I would have made more, or whatever. It cements in your mind that that's what you need to do. And if you do that, you're going to have better results. And once that is in your mind, then you've got the conviction to hold the trade. For me, it was always holding that trade for that little bit longer. I'm not quite sure. I don't know if you mentioned on the question whether that's conviction to kind of pull the trigger or not. It's either going to be to get in or to hold it and not get out. Most people get out too soon. So conviction to hold the trade is like, listen, I'm in the right trade. Look at the boxes that are tick, 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 tick. The chances of this going in my direction are going to be good. And then overconfidence is, again, overruling your trading plan, but in the other way. You're not believing, you think you're better than your trading plan. You think that you can have a better performance than your trading plan. And so you kind of just trade, and you probably will move stops. You will probably, take stops out completely, take more position size. I've done this myself. Position size was a kind of big one for me, taking too much size and stuff. Overconfidence, breaking the rules of the trading plan. How do you do it? You have to just kind of, again, come back to the point of going back and saying, hey, look, if I trade too much size on these losers, it's going to do some serious damage to my account. So I need to be sure that my risk is managed. Here's the proof. Now, do not be overconfident. Keep focused on the trading plan. And normally a couple of times overconfidence kind of works itself out, because you make the mistake, you do it, and you get a big smack from the market, and most of the time that reins it in. If it doesn't rein it in, you've got to kind of think of, oh, I need to really just be alert to what triggers my overconfidence. Is it 3 kind of winners in a row? Is it, a big win? Whatever it is, something will be the trigger. Recognizing that trigger and then being able to just step back from yourself and say, oh, you know what? Sometimes this is when I get a little bit overconfident. I get a little bit cocky. I think I'm a god status trader. Let me take a rest, come back, reset, come back in and try and do something like that. Anyway, hope that is of some use. And as always, comments in the comment section below. This is purely my approach and opinion to stuff. Always welcome to hear how you guys approach things like overconfidence, conviction in holding your trades or pulling the trigger, or whatever part of the trading process that may be. But as always, good trading, keep the risk managed. I shall see you in the next one. Bye-bye.